In my over 10 years of trading the market, one of the most important concepts that I've learned how to master to become profitable over the years and really identify good trade setups is understanding market structure, and especially mastering the break of structure. So I took some time to put together a good training video for you guys that's going to help refine your skills and understanding on market structure and break of structure to help you identify setups more accurately. We're going to be going over this, especially on gold, and I'm going to be showing you guys live examples on trades that I've taken, trades that I've called out even as signals in my group, trades that I've taken myself, and even trades that I've gone over on live streams. So we're going to be talking from personal experience here, and some of you guys have experienced some of the trades I'm going to be going over and some of the market conditions I'm going to be going over with this concept with me, whether it's on live streams or in my signals group. For those of you guys that do not know me, my name is Evan Cabral. I've been a trader now for 11 years. I started trading Forex pairs in the year of 2015, 2016. It was actually my last year in high school when I figured out what Forex trading was. Being that I'm from Canada, USD CAD was my favorite pair at the time. I remember when I first started trading Forex, Bitcoin was around $1,200 per coin. That's when I bought my first Bitcoin. So up until that point, till now, I've seen Bitcoin and crypto's journey. I've got to learn and understand the Bitcoin market, the gold market. For the last 11 years, I've been on the charts pretty much every single day of the year, of the week, of the month. I pretty much sleep and live and breathe candlesticks. So up until this point, it's been a long and crazy journey. I do feel like I'm really just getting started because of all the knowledge, all the wisdom, and all the experience that I have accumulated over the last 11 years. From this point to when I started, I've watched Bitcoin's whole journey from $1,200 when I first saw it to breaking over 100K, getting to $125,000 per coin. I remember buying my first gold ounce, and I'll pop it up because I still have the email when I purchased my first ever gold coin. And at the time, gold was like $1,230 USD. And I've got to experience and watch and witness gold's journey to breaking above $4,000 now. So needless to say, the journey has been pretty crazy. There's been a lot of ups, and a lot of downs, a lot of failures, a lot of tough times, a lot of anxiety, a lot of stressful times where I felt like I almost wanted to give up or nothing was really going my way or not working at all in my favor. But I always still had that bigger vision of where I wanted to get to, and I was always persistent to figure out how trading works. So now my main focus is to help traders improve their skills, help traders improve their confidence, help traders improve their strategies and their methodologies and the psychology on how they actually perceive and look at the market. Over the last 6 years of being able to impact, teach, help, coach, mentor, and speak in front of tens and thousands of individuals worldwide, I've recognized a commonality in the market and why most traders struggle. It's because of their psychology. That is the one main thing I have recognized over the years of speaking on these stages, speaking at different events in front of tens of thousands of different individuals that I have taught. I've always recognized a very similar pattern, a very similar commonality on why traders struggle, why traders don't make it. I'm gonna keep this video very simple but effective for you guys today. And one of the main things I've recognized for traders, whether it's beginning traders or even traders who have been trading for many, many years, those are some of the main people that I coach and mentor, is the people who have been trading for maybe a year, maybe 2 years, maybe 3 years. But this video is gonna be for any type of trader, whether you're a beginner trader, whether you're a professional trader and you're just trying to refine some stuff from someone else's perspective, this video is for you. Whether you're an intermediate trader and you already have the knowledge, this video is gonna help you identify maybe some things you haven't been doing or some ways that you've been perceiving the market wrong. And that's what most of our videos go over. So we're gonna be talking about how to correctly define market structure, how to spot a true break of structure, BOS, how to spot reversals in the market, and the exact process that I use to confirm continuation setups in the market. In this video, I'm gonna be going over an example from this week on a trade that I took on gold, because gold has been in a serious uptrend and its market structure has been providing a lot of continuation setups on smaller time frames like the 5-minute, the 15-minute, the 30-minute chart, sometimes the hourly. But some of the examples I'm gonna be showing you guys on this video are gonna be on 5-minute, 15-minute, 30-minute, as this one here is for the first example on a trade that I took on gold, kind of from the start to the trade to near the finish of the trade. There's different screenshots here that you can see from my MetaTrader platform that I was using. Now, the first screenshot is where I start entering the market. And this part might not make sense for some of you guys that are beginners, but it will as we get through the video and we go over a bit more about what market structure is. For those of you guys who are refined traders, you might already see what we're looking at here. But what we have is an uptrend on gold on the 5-minute chart. Its market structure is making what we call higher highs, and we're continuing. So you could see how gold made a strong move up and it makes the high here and it starts pulling back. And what are we getting? Something I like to call a rejection candlestick. But the important thing here is understanding the market structure and understanding the pullback. The problem that a lot of traders make is when something is breaking out, they like to buy. Me, I like to wait for pullbacks in my market structure. I like to let the market retrace, especially if I can identify an uptrend. So this is an example of me entering the trade. The next screenshot shows pretty much the same trade. Now, if we zoom in here, what do you notice? We have a low down here, we have a high, we have a higher low, we have a higher high, and what's the market potentially gonna make here? A potential low. So it's a little bit of forward thinking, something I like to call. If you guys come on my streams or if you're in the inner circle, you've probably heard me talk about forward thinking before. Now, as we go forward, I even added more entries here. We're gonna come back to this because this is gonna make a little more sense in a couple of minutes once we go over the charts a bit more and what market structure is and what a break of structure actually is and how to spot it on the charts. So where I find break of structure works best is gonna be on XAU, Bitcoin, and Forex pairs. XAU because it's high volatile and it's deep structure clarity. So what that means is its market structure is clear. If you spend enough time with XAU, you're gonna be able to read its market structure clearly and understand its movements. Bitcoin, because it's liquidity driven, ideal for break of structure confirmations. Liquidity driven meaning it takes a move to really make a move a lot of times with Bitcoin. And because you have a lot of leverage trading with Bitcoin, there's a lot of liquidity grabs that happen in the market. So it's kind of easy to understand where the liquidity is for Bitcoin or even cryptocurrency in general. Forex pairs, because their trending behavior is easier to identify. They're not as volatile, so the structure identification is a bit simpler. So with all that being said, like break of structure isn't limited to what you like to look at it on. Me personally, my favorite is XAU, gold. That's my favorite thing that I like to trade in the market in general. It's the thing that I look at 90% of the time when I'm trading, other than when I'm checking Bitcoin's price. If I'm day trading, scalping, it's gonna be on gold. A lot of you guys ask me, why do I trade gold only? Why don't I trade indices? Why don't I trade Forex pairs? It's because about 6 years ago, 7 years ago, I started to recognize I'm good with gold. I'm good at understanding its movements. I'm good at recognizing its structure. So that's something I just stuck to. And maybe that's a tip for some of you guys watching this video. You don't have to spread yourself out everywhere with every trading pair. You can stick to one thing and be really, really good at it. So I recognized I was good at reading gold. That's why I stuck to it. A lot of you guys asked me that question. What do you need to spot a valid break of structure? So you need clear identification of swing highs and lows. Body closes beyond structure, not just a wick. You need to have awareness of the trend direction. Higher highs, higher lows, or lower highs or lower lows. Awareness of trend direction is super important because you need to understand where the flow of the market is. If you can't identify the flow, you can't really go with the flow. And you want to be able to use momentum as a confirmation. You need to be good at reading momentum or volume or even displacement candles as confirmations, retracements, pullbacks, fair value gaps. Some of these things we're going to be going into, but in simple terms, market structure is really where it starts. So for those of you guys that are at the beginner level, when we're talking about market structure, you need to be able to identify higher highs, higher lows, or lower highs and lower lows. If you're in an uptrend, it needs to be something like this. And we're looking at XAU right now because XAU has been on a serious uptrend this whole entire year. So what does this part of the market tell you that you're in? Over time, you're in a serious trending market here because continuously the market is establishing higher highs and higher lows along the way. So this would be classified as a bullish market structure. So when you're in an uptrend like this, how do we know that the trend is still intact? The trend is still holding? It's when the highs get broken. When you're in an uptrend and these highs just get continuously broken. As you can see along the way up, we start out with this high down here. And the market goes down for a bit. From here, we make a low that trades up and it breaks through that high. So we could see a clean break above that high right there. Closing above it, clean, and then continuing up after, and it ends up making this swing high point. So at this point, it's like we know the market's bullish. If we're here on the chart, it's like we are in more of like a bullish territory now. We don't want to be buying. This is where traders make the mistake. Breakout traders, I mean, it's not bad being a breakout trader, but this is where most traders start to get involved because it's more euphoric, it's thrilling. It's like price is going up. Most traders want to buy when price is going up and making strong moves. This is when you want to wait for the retracement, and that's what we're going to be talking about going forward in this video as well. So price retraces back pretty much to where it broke out. So this is where we can tie some things in together, like a previous resistance zone here, or even down here. As you can see, there's another one. But what this does here is helps us understand what trend we're in and that the trend is still there. As you can see along the way up, we keep making these continuous highs. Right? The market keeps making these continuous highs. Every time it makes a higher high, what does the market do? It drops. There's more like a sell signal every time the market makes a higher high. This is usually where traders get trapped, is when the market's making a higher high, is because they're expecting the market to continue, the market to continue, or the market to continue. This is usually where traders get faked out or where liquidity gets grabbed a lot. Because again, like I said, think about it in crypto terms. For those of you guys that are in crypto, when a crypto coin pumps, that's when most people want to start buying it. They're like, oh my gosh, I gotta buy. So gold is kind of similar in that nature, especially for a lot of retail traders. When it's moving, people really start to FOMO because it's really volatile and they want to jump in more. So higher highs are a point where we have to kind of expect retracements can come. We want to let these types of retracements happen in the market when it comes to identifying an uptrend. So like I said, when it comes down to some of the first steps is being able to clearly identify whether you're in an uptrend or whether you are in a downtrend. That could be at any time frame. This is a 4-hour chart. So these are the steps for executing breakout structure and market structure correctly and understanding this stuff more. Number one, identify the current trend. Number two, that's mark major structure points. That's going to be HH for higher high, HL for higher low, or LH for lower high, and LL for lower low. Now, what I like to do is put something like this, the circle eclipse. I like to grab this and mark my major swing points that I can see clearly. And you can clone that and you can just put it on the highs or put it on the lows. You can label that here with call out, or you can add text. So what a lot of traders like to do is, for instance, here we could say we have lower low and price. Here we could say we have a higher high. And then we can continue that as it goes forward, now we have higher high. Now we have higher low. And we can continue that along the way here. So for you beginner traders, this would be a good way to practice. For anybody who's a beginner trader who hasn't really gotten the repetition in on the charts, doing something like this on different parts of the chart would be good practice for you to train your eyes and for you to get better at the repetition of being more hands-on on your screen time. It's gonna allow you to have more screen time on the chart, which is gonna train your eyes, and this is also basically like back testing. So for those of you beginner traders, it's not about just watching a video. It's about taking that information and then putting it onto your own charts, applying it yourself, getting more hands-on. That's what's really gonna teach you. And you can go to different parts of the chart and do this yourself. So as you can see, this had a clear bullish uptrend, and there's even some break and retests along the way. So let's clear the chart up a little bit. We already know this was in a solid uptrend. You can see here, break and retest, break and retest. So when it comes down to combining more than one thing together, we can have break of structure, trend, market structure, and some other types of confluences added together. Something like this, looking for supply and demand zones, previous support and resistance zones inside our trend. So we already know market structure is bullish in here. Now we can use supply and demand zones to identify areas where the market could react or areas where the market could retrace to. For example, as this continues and goes up, you can see the market keeps retracing pretty much back to where it came from or back to the breakout level. So when you break a high, that's where the volume pretty much comes in. Now, once the market's made that move and it's settled down, it's usually going to retrace pretty much back to where it broke out because there can be an imbalance here in the market. So if you look at some of these examples where we're getting these breakouts, you can see the market pretty much comes back and retraces. So one of the steps we put in here on the previous slide was wait for the retracement. You can use supply and demand areas to define where the market could retrace back to, or even something like fair value gaps. Another example of this would be here on this chart, where we have a fair value gap right here, a displacement on this 5-minute chart here on XAU. This is actually today's market that I'm recording this video, and this is on a 5-minute chart. So maybe a little bit different from what we just looked at. So look at gold's movements today, for example. And now that we understand maybe market structure a bit more, that we want to rate for a retracement, we can actually see this stuff on any time frame. So if you look here, this morning there was a mini 5-minute trend on gold. And I'm going to go over one more example on this and then back to the screenshot from the examples that I took this week. If you look here, there's a mini uptrend on gold. We're making higher highs. This is on a 5-minute chart. So what do you notice here? We have that first breakup in the market. What's it doing? It's breaking above this high. Clear break above this high. What does the market do? Retraces that movement. This is also a fair value gap here. And then we get continuation up. The market prints a high here. And it continues up. Now it's above this high. And this is exactly like the 4-hour chart that we just looked at. This is just on a 5-minute chart now. This is pretty much the same. It's just a smaller trend that's happening in a session, in a smaller amount of time. This is literally happening in a couple of hours where the market is creating this quick trend here on gold. This was happening in New York session. So you can see the price moves up, followed by the retracements. Price moves up, followed by a retracement. Price moves up. You can think break and retest kind of with this stuff, but the market doesn't always come back as deep as you may want it to. Like see here, for example, that's because there's a displacement between here and here. There's a fair value gap sitting right here. I can actually put on one of my indicators that we have called the Smart Money Market Structure tool. When I put this indicator on the chart, it actually helps me identify fair value gaps on the chart. As you can see right here, if I turn on fair value gap, it's going to show me some green lines So you can see here, there's actually this right here is a fair value gap. There's even a fair value gap right here. Remember what I said? This candle has a fair value gap in it. That candle also breaks above the structure here. So it retraces into that fair value gap. Fair value gap is a displacement basically in the market, and the market usually rebalances these fair value gaps. It's basically like a disbalance between buyers and sellers. And it's usually happening on a candlestick that looks exactly like these two green ones that pump up extremely fast and just move away from price really, really quickly. So right here, we have a fair value gap printed as well on this retracement. So we can combine other confluences inside of this, like whole numbers, some of the other stuff I talk about in my YouTube videos, inside the inner circle, and on my live streams. Last thing we're gonna talk about here is on one more chart that we're gonna go over here. So here, I'm gonna talk a little bit about reversals. And again, one more example from a trade from this week. So how to spot reversals. The one thing is you need a very strong movement in the market to have a reversal come off of. So when we're looking at this down move, a huge drop on gold. Now, if you understand market structure, break of structure, change of character, you don't need to catch the bottom of a reversal. Because usually when price reverses, it will change its character and it will offer a setup inside the trend. So for example here, we could see a huge drop on gold happened here. And what did price do? It formed these highs here. What happens when price breaks above those highs? We get a strong movement up. So there's our break of structure. There's us pretty much like changing the character on price, because we had a huge drop down and we went up, we came back down. And then we ended up breaking above these highs right here. I'm gonna circle them with the eclipse. So what I like to do is use this eclipse tool when I'm like marking key points. So we can see a strong breakout through there. And what does the market do? It retraces back. So being able to identify moments like this, where maybe the market has dropped like crazy, it's made an extreme move down. You don't have to always catch the bottom if you understand market trends, change of character, and how we can get a lot of these types of continuation setups here. So for example, we have a high here, and what do we make? We make a higher high here. And what do we make? A higher high here. So two trading opportunities, understanding market structure, break of structure higher. One here, we could have been entering buys here. Anyone in my Discord did get this buy setup actually, because I sent this buy here the other day right here. So for example, October 22nd, I actually sent this buy in my Discord in the inner circle right here. So here's the chart before. You can see break up. I'm looking at the trend here that could be established. Now this is a reversal happening. This is after a strong move down, price crashes, and we get a strong move up. And where does price retrace to? This is where I'm waiting to take my trade. But this has a strong reversal, a nice shift up in your market structure, so a good place for price to react. And it did exactly that. It started reacting off of this point, and it went even higher. It ended up smashing all of our targets. This was the trade right here. So you can see a nice break up, pullback, continuation. This is after a strong move down. So a very strong price move down in the market, and then a shift up. Make sure you guys comment on this video if you want me to do part 2 of this training, because I could talk way more about how to identify reversals. This was about market structure, break of structure, and continuations a bit. But if you guys want, I can make another video that's similar to this one on how to identify and spot reversals correctly on gold so you don't get trapped. This trade was perfect, and you can see there was literally 2 trades here. Both of these trades I called out in my inner circle group. We took a buy here and we took a buy here. Understanding market structure, you can see clearly here. So guys, doesn't matter what type of trader you are, beginner, intermediate, advanced like me, don't ignore this stuff. When you ignore structure, the market collects the bill in emotions, money, and time. And there can be a cost to misreading this stuff as we have outlined here. So guys, if you got value from this video, if you enjoyed this video, I didn't want to make it too long for you guys. I got as much information as I could in this short period of time. Make sure you comment on this video if you guys want me to do a part 2 on this video on how to identify reversals, how to spot reversals, because I could go much more in depth. I wanted to keep this simple. I didn't want to turn this into a full course for you guys, but if you guys want me to continue this lesson, if you guys want me to go over more information, more examples, and continue this topic in a part 2, comment down below, especially if you got value and enjoyed the information, because we can continue this topic on how to spot and identify reversals with change of character, especially on gold, so you don't get trapped and so you're more prepared for 2026's market. So guys, make sure you drop a comment down below if you guys want to see part 2 for this video. We can do a continuation of this lesson. So after everything that we just went over, guys, I'm gonna explain this slide one more time for you guys from start to finish of me entering the trade and where the trade ended off. I made about $700 on this trade. It was a light trade, and I have more examples like this for you guys coming on trades that I took literally this week. Now, market uptrend, identifying what trend we are in, being able to read the momentum, like we said, and feel that momentum, where the trend is going and going with the flow. So we have the entry happening here, and you can see here, pretty much a break and retest happening. You have your low, you have your higher high, pulling back into that. When you look at the screenshot on the left, this is the same trades here. So when we look at this screenshot over here to the right, this is the same exact trades that were taken, started over here. Now this is because, again, market's in that solid uptrend, following the trend. This is how you're going to be able to spot and identify entries like this, but you have to wait for the pullbacks. You can't chase those pullbacks. And you want those pullbacks to at least come into a good visible area within your market structure. So pro tip for those of you guys who are more advanced and those of you guys who follow the streams, you can use rejection candles and whole numbers also to confirm your entry on a setup like this.